Hey, it's H here, and on today's video we're checking out some risk management and position sizing. This is an addition to the Elliott wave trading setup, and this way you can have some rules to go and follow with the risk management with that trade. Now, got a few rules and a guideline helping you to determine whether to take a trade at all. Now, the rules are something that I follow 100%, and the guideline is something that I strive towards. Now, rule number 1 is simple. You risk 1% of your portfolio per trade, and of course you can go lower, and with a bigger portfolio or size of your trading portfolio it might be wise to get even smaller percentages per trade. Now, note that this is a risk of 1%. This is not the size of your trading amount. It's the risk you're willing to lose per trade. Now, number 2 is don't add to losing trades. That is something that burned me a couple times before I learned it, and that is definitely something that I'm abiding by now. Now, number 3 is don't add to winning positions if that has a chance of making it a losing position. Now, as a guideline, risk to reward ratio is about 3, and that's basically it. Now I've got an example for you to calculate your position size for these trades. Now, if you got a $1,000 trading portfolio, the rule says that 1% of per trade, so 1% of that $1,000 is $10, and here's the formula you can use. So risk amount, so that's the $10, divided by stop loss percentage divided by 100 is the position size. So here's, if we found a setup on a chart and we got a stop percentage of 3.11, we got risk to reward ratio about 4, that is fine. So we need to take this stop percentage into consideration, and we can calculate our position size here. So the $10 divided by the stop loss percentage divided by 100 is $316. So this would be the size of our position we are entering here. If the trade goes bad, we are only losing the $10 here. And that's how it simply is. Now, here's just an example how this can be achieved. This is about the same trading strategy that I showed you earlier. This is just to add some kind of a risk management position sizing for it. So this is the setup. You see 5 waves, 3 waves back, and now you are looking for a smaller degree, 5 waves and 3 waves again. Then you check out your risk to reward, it is good, and you put your stop below here. You calculate your position size with this stop loss in mind, or stop percentage in mind, and you go up or down whether it turns bad against you, the trade, or not. Then later on you see the 5 waves finish here, you see a 3-wave pullback, and again 5 waves up and 3 waves down is coming. So now you're thinking, can I add to this position? You evaluate it again. Let's make this a bit smaller, and you would have the stop below this low. You have a good risk to reward ratio, you got a certain stop loss percentage, you can calculate your position size accordingly, and then you have this number 3 rule, don't add to winning positions if that has a chance of making it a losing position. Now you need to calculate your current entry was down here, and the stop loss is going to be below here. So currently the most you're willing to lose is this much, and this size is basically the amount you're willing to lose. Now, can this amount of movement cover this? If so, then you can add to your position. And obviously in this case it would cover it easily, and it would be allowed by these rules. So I think that's going to do it for this video. Thanks for watching, and let me know if this is any use to you. Thanks for watching, bye bye bye.